Hello everyone, this is Riya Singh, the currency analyst for Nirmal Bang. So let's look at the rupee outlook for the coming sessions. Now, if you look at the dollar index, it has been sliding quite a much to the lows as the Joe Biden commenced the journey towards the win. The major reason for the dollar index to slide was the probability of Joe Biden winning the election. The further slide came in as showed with the, as showed in the data that the US added more jobs, more than what was forecasted for the month. As far as the Fed action goes, Fed has kept the rates near zero and said that further monetary and fiscal support is likely needed to strengthen the economy. The downtrend in the greenback may continue after small pullback as Trump's put on the allegations with respect to the counting of votes and such, and this can result into, the push back of the much awaited fiscal measures that the market was awaiting. But since it got pushed back beyond the elections, it may take further down the postponement path, and we can expect it to now come after Jan or in the last week of the Jan, after the Biden takes the oath as 47th president of US. Now, the Eurozone may introduce further fiscal measures in near term, but this will have a very slight effect on the dollar, because whenever there is a fiscal infusion in the country, the domestic currency goes for a weakening path. But if you compare to the overall fiscal measures that is introduced in the Euro and US, the difference is quite vast, and thus we can definitely expect that though Eurozone may come out with more fiscal measures, but it will have a very slight effect on the dollar. And we can see that the dollar index might have a slight green momentum in few sessions, but I think for the coming session it can test around 92, 91 levels as well. As far as the rupee goes, I think rupee drop has seen the lowest weakening against the dollar in more than 2 months, as the appetite for the emerging market asset has been sapped by rising global virus infections and uncertainty over the US election outcome. The rise of the infection was also witnessed by India. So the chances of putting down the lockdowns again, the probability of that might increase now. Also, the other reason that the rupee was weakening so much was the intensive buying of the RBI that we have seen in order to increase the forex reserve. So this was also one of the major reasons that we had seen rupee testing the levels of 75.05 in the future market. Now, after the US elections was over and, the counting has been done and the result is all out, there is a strong correction that was witnessed in the last 2 sessions for the rupee, probably after the dollar index, saw a quite intensive bearish sentiment. The main result of this was obviously the increased probability of Joe Biden winning and paving the way for an increased infusion of fiscal support, thus weakening the dollar in the process. Now, concluding this, I think what lies ahead for the RBI is that we have seen quite an RBI OMO operation in past few months, and even in the last week we had seen around 200 billion rupees of purchase that was done by the RBI in the bonds. So even RBI is going with the infusion of liquidity into the market, helping the banks to recover from their borrowing phase. So I think there can be a further 100 billion infusion that can be done. So this will help the rupee to test the levels of 74.50, 74.65 in the coming sessions. And the maximum depreciation that I'm looking forward for the rupee in the coming sessions is 74.85, probably fueled by the RBI operations as well as the current data that we have seen for the week of November. We have seen that that there has been a forex buying that has been happening from the from the RBI side, but there is also the total Indian economy numbers that for the October, which has not been quite impressive. There is a drop in the week, first week of November 8 in the active cases of COVID-19, but we have seen quite a drop in demand and employment rate as well. So this is indicating that probably the rise in the demand numbers that we have seen in the October was partly due to the festive demand and such, and the recovery momentum is still quite weak. So if there is a recovery that can happen after this festive season is over, that will be a true nature of the recovery that can be taken into consideration for the further part down in the rupee. So concluding this, I think rupee will likely track the overall global risk sentiment and the swings in the near term, and it is likely that the RBI will ensure relatively narrower ranges as it is continuing to intervene not only from the weakening part but also from the appreciation part. So whenever there is appreciation happening, RBI is actively actively buying into the dollar and getting the rupee back onto track towards 74.20 levels. So I think the strategy that one can go forward will be, first one is to buy into the rupee right now above 74.35 for a target of 74.50, 74.65. As I said, the maximum depreciation that I am currently forecasting is around 74.85 level. So if that level is breached, you can definitely look out for selling into the rupee from an higher highs towards the 74 level, 73.85 as well. So this is my outlook for the rupee into the coming days. Thank you for listening. Stay home, stay safe.